Here. Yes, ma'am.
I have a question for you, Rob, and that is Justine Peterson more successful at lending and getting that money back than these lame banks that are out there? Are you all better at it? Can you prove that you're better at it?
The short answer is, in terms of the delinquency, not yet. And the reason is because our market is much larger and expanded. So we're making loans with risk factors that, to a market with a risk factor of this. Lending institutions are making loans to risk factors here, but we're working on it. And we have, by the way, we have to get better at it. And two ways to get better at it. One is to capture the market that may be less risky. Because again, our business plan heretofore has been to really open up the market. So we're learning ways to both assist the market in education, but also to get out into the larger market as people know about the possibilities of borrowing money through our organization.
I was just going to say that Justine Peterson, you are making loans to a segment that the banks are not meeting.
Yes.
So
yes,
there's some value in that.
Although what's interesting, Karen, is that we're seeing, in terms of a profile of a borrower, we're seeing a very different profile in the last 4 to 8 quarters than we were previous to that. The profile that we're seeing is a higher credit score, typically more debt. So how do you weigh that risk? But again, I think that if there are those of you out there who can maybe even begin to develop community development financial institutions, locally and regionally, there'll be a better understanding among lending institutions of their value.
What categories are high risk area? What is
in terms of industry?
In terms of individual, commercial or industry?
Yeah,
what's the category for that risk area?
Do you want to touch that? Yeah.
I'd like to know that.
Under the Department of the Treasury defines target markets. It defines them as census tracts with 50% or more minority. It also defines them in terms of people groups that are protected classes, African Americans, women, Native Americans. So those are the kinds of, that's the kind of language that you'll see if you look at the Treasury's Community Development Financial Institution definition.
My second question, is there any steps taken for the banking institutions to narrow that gap?
You mean in terms of lending, or?
In terms of the risk that's involved. I just got, there's a high risk and there's medium risk. Is there any steps being taken to bring these risk factors down?
Well, that's when we participate with SBA. That brings that risk down, or if we participate with USDA, that brings, the risk down for the bank. But now that we're talking about risk, though, there are, and again, because of the economy, there are certain industries right now that are not looked favorable. And I'll just use restaurants as an example, because our history tells us that probably 80% of the loans we make for restaurants go belly up. And so it would be really, you'd be really hard pressed to get a loan for a restaurant. Just and again, we're looking at the risk factors because of what's happening.
What business should someone go into?
Franchise the health system is certainly a big thing right now. Any health industry.
Let me address the risk issue from a different perspective. You should know that banks, a good bank makes 1% on assets. A good bank makes 1% of assets. Now, most of your small businesses would probably go out of business if you had to work on that thin a margin. Okay, and we need to keep. And that's the other thing about the financial services system. You have commercial banks, you have investment banks, you have non-bank financial services companies, and as you move up the risk spectrum, you're actually dealing with a different class of financial institution. That's why I say that what we really ought to be doing as small business is leaving the banks in the place where they are, because they serve a very, very needed function. bring them along with the CDFIs as partners to use the CDFIs relationship to lend to a customer base where we really should be taking a higher level of risk. So you get the most of best of both worlds. The problem you have, if I'm a banker, classically trained banker from New York Bank, you come and sit down across from me, all the regulations that we talked about and the fact that you may not look like me. I mean, those are pretty basic things that get in the way of that relationship. There's anybody know Central West End?
Yeah.
How many people can afford to live there? I'm putting my hand down. Now, there was a bank called Charter Bank. 35 or 40 years ago, they are on Lindell at Euclid. It's now a Boatman's branch. Okay? When that bank located there, you could buy a shell in the Central West End for $35,000.
Not anymore. I used to steal.
Right, now. But see, this is what we have to understand so we don't end up playing at the margins on these things and just going down the same road. The bank was regulated. The bank had examiners that came in to look at their books. That bank, because it was a local bank, and because they figured out it's real smart if we get personally involved in building this community, because there's a big hospital there, there's a university there, they went out and they took the kinds of risks that banks should take, which was pretty big risks, but it paid off. And the Central West End is what it is now because that little bank sitting there took risks of the same kind that you're asking the bank to take risks on, but you don't have the foundation. You don't have, I mean, banking at the end of the day is about relationships. If your father, your grandfather, the member of the St. Louis Country Club, I mean, we're talking, this is real life. Okay? It's real life. So we need our own institution. That's, at the end of the day, we need our own institution so that we're getting the same kind of relationship interaction when we go into the bank. Not because there's a giveaway, anything like that going on, but because we understand each other. And that's what makes Justine Peterson work on the microloan program. They want to do it. And PNC wants to help them. And Regions wants to help them. If we get the banks in on our terms and we run it, we've got the best of all worlds.